All right, I'm going to officially begin then. Well, welcome everybody. Welcome to FX Street's webinar today. It's the 30th of April. If anybody's going to end up watching the recording of this, it's just gone 5 British summertime. This is Sam Evans with you of Online Trading Academy. I hope you're all doing well and happy. I hope the markets have been treating you well. This is one of my, I think I need maybe my third session this year. Good to be here as I like to kind of come in and join you guys on a monthly basis if I can as well. And I thought this week, I'd kind of just jump in with a currency and commodity market overview. Just kind of taking a little look at some of the things that I'm looking at, key levels and so on, using the Online Trading Academy patented core strategy, marking off some of the big supply and demand levels that I'm going to be using in my own trading. I'm going to be going more from a big picture outlook here as well. So especially with this time of day, not a lot of great intraday opportunities on the markets, but as we know, the forex market loves to move, and I think there's been some really good moves over the last couple of weeks. And if you're prepared to set, forget, and let those trades breathe, if you catch the right side of it, there can be some pretty awesome opportunities. So I'm going to take a look at the currency markets, but also some of the related commodity markets too, if you're interested as well. Look at what we're finding. I'm going to just basically look at the chart like I'm looking at it at home, although you guys are here to ask questions as well. If you've got any questions for me after here, feel free to drop me an email. It's sevans@tradingacademy.com. It's on the slide in front of you. My Twitter handle is @SamEvansTrader. Okay, very good. I'm going to go a little bit look on how do we know which levels we should ignore and which we should take. Absolutely. Well, I'm going to kind of cover a little bit of that as well, to give you a little bit of a heads up on that. Obviously, in the limited time that we've got as well, I'll get through as much as I possibly can. So bear with me on that. But we'll discuss a little bit of that today. Okay, and we'll try to kind of look at some of the key areas that are in play right now. So yeah, we'll get to that, Raphael. Okay. Will do, Eugene. If you let me know what your handle is, I will refollow. Absolutely. Okay. I've been a little off of the Twitter lately because we had an unfortunate series of events in the family as well. Okay, Eugene, I'll do. I can remember that, like Tony Stark. Great name. Yeah, unfortunately, we've had a tough time of it in the family, so I've been a little quiet on that front, but I will absolutely do that. Why don't we start with the dollar index? I like to take a good look at the dollar index on a regular basis, and the reason I like to do this is because I believe that looking at the dollar index gives me a good feel overall of what to expect. If we're going to trade the major currency pairs, we shouldn't really ignore the dollar. So that's where I'd like to start. And I think one of the major things that is key right now. I was doing an interview with Dale Pinker in the trading room at the start of this year, and we were actually looking at the dollar index. So the lines that you're seeing on my charts right now are based on lines that I drew on my chart when I was with Dale. I've not moved this off. We were talking about the magical round number of 100 points on the dollar index, and as you can see, we've hit our head against this area of supply right now, and we're falling quite a way now. With the rally that we've seen in the dollar over the last year, 18 months or so, I'm not too surprised to see the correction. This was a major supply zone that I have my eye on. I want to kind of put this on here right now. This level of supply has been key for me, mainly because obviously it's located around the $100 mark, which is obviously very, very important from that perspective. Big round number. Always think about that in currencies. The round numbers are very, very key, and especially if they form good zones, good trading opportunities there, we don't want to ignore those. But also, we had a very strong drop away from this area originally. I'd like to have seen less basing in this area. I really did like this area a little bit below it that I was also looking at too, this very clean level of supply, which the market did bat its head against a little head against previously. My reason for picking the slightly higher zone, okay, is because of it being at a round number of 100. So if any of you are wondering, oh Sam, what about this supply level to here, the strong drop in price? Granted, it was a great level and did produce some nice opportunities as well. However, my main thinking behind this area, if I put a box around it, the main thinking on this area is because of it being a round number. Does that make sense, guys? So with that being in that, with like that, kind of gives me, I didn't mean to do that. Just bear with me a second, guys. Just want to make a solid line on here. Just kind of have that like that. Okay. And this being around here, the round number was key. Okay. So just usually say I'm following your side and sometime now. My question is level two order book important? Do I need to read that right now? I'm doing great with logic and supply and demand. Yeah. Great question. Let me answer that just quickly on the topic. The order book, maybe 10 years ago, 12 years ago, absolutely. Because obviously the market, more and more, if you take about 15 years ago when online trading became popular, it worked. But all those kind of traders got wind of it now. And the problem with an order book, the level two window matrix and so on like that, they're limit orders. They're not filled orders. They're orders that are just basically people saying, I'm prepared to buy. I'm prepared to sell, right? But it doesn't mean they're actually committed to doing it. So there's a lot of games that can be played on there, Eugene. So I completely avoid it. Just trust price. That's all that's really important. That's what I've always done and how I've always looked at it as well. I think you should focus on your supply and demand and your logic. Those for me are the key things. So I couldn't agree with you any more than that. Okay. So yeah, let's kind of keep it to keep it nice and simple and keep it onto the levels as well. All right. Now, I just wanted to kind of make this a little bit. There you go. That's better. Just so that line's not too thick so you can clearly see the candles in here as well. This supply area being the round number was key. Okay. This lower area, yes, you could look at it like that. I mean, prices never traded above this area. So now we're looking at this zone. They traded above it but didn't close above it. But it is like a confirmation of that area. Yeah, it's a good way of looking at it because the candles didn't close above that zone. Absolutely. That's a good way to look at it. Now, what is interesting, however, is this little area that we're in right now. And this is the one that I'm focused on. This is really key for the dollar right now. So we can see obviously where we come from. And it's great right now, but we've got to think as traders, what next? What next? And this dollar here, what I'm looking at right now, this for me is a really key area. And I'm going to give you the numbers on here that I'm looking at. I'm looking at an area between 95.34 and 93.24. There's a little kind of pause. We had a good strong rally in price, a little bit of a pause, and then the final leg of this rally. Now, this for me, psychologically, could be a good opportunity for the dollar to have a little short-term rally. Okay? Number of reasons why. We're back to another round number at 95. Every uptrend to continue needs a pullback. Okay, it's very rare to see a market trend in an uptrend or a sustained downtrend and not have a pullback. Yeah. So in this particular case on here, what I want to see is a pullback. I'd feel more comfortable that this market could continue to the upside if it did actually make a pullback. You understand? All right. So in this case here, what I'm concerned about is we rallied. There was a little base, it's a single candle just here, and then this really strong push away. And this really strong push away tells me that there was an imbalance, okay? So you see we've just come back into this area, okay? So I'm identifying that level because of the basing candle and then the strong rally that took away from there. So now at this particular point, let's zoom in on a smaller time frame between 95.34 and 93.24. Because if this area holds, I wouldn't be surprised to see a retest of the highs, okay? Now I would still lean on the dollar up at 100 again because we could put in a double top on this. But right now, I'm more inclined to look at the market and go, hey, I expect a rally from this particular point. If we break 93.24, then I've got open space to the downside that you can see from here, which will probably take me down to the next round number at 90. So this is a key area for me. It's kind of like, if you like a floor that's going to hold and be able to push us back up because there's lots of buying activity in this area. Or if this area breaks, I'd be looking for this to be a bearish signal for a continuation of price down to this next key area where this last big rally happened around 90.39. So we'll talk a little bit about some of the structure of the supply and demand level now by going over to a smaller time frame. Let's go to the weekly charts, and you can see it even better on this weekly chart. So some of you are asking about what to look for from it when it comes to a level of supply and demand. Well, let's talk about that. Let's talk about that for a second. Do you see this zone here? This is the same monthly area, but do you see now how the market had a rally? There was a pause, and do you see this tremendously strong rally in the price? Do you see this here? See this really strong rally in price that I'm marking off on my chart? Really kind of took off. You see that? Well, that tells me a couple of things, guys. Okay, that tells me a couple of things. What that tells me is that was likely institutions buying dollars because of this move. Why? Well, because at the end of the day, we as traders, retail traders don't really control the market. We don't have deep enough pockets, but who does have deep enough pockets to really kind of throw the market around? Major banks, major institutions, major hedge funds, those kind of people. So I don't look at a level where I see a big rally like that on those blue candles and say, hey, you know what? That was probably retail people who did that. Could it be? Could they have been part of it? Were there some savvy investors, smart traders who did have that opportunity? Absolutely. Yeah. Who did maybe get on board that. But we know generally retail traders struggle more than the institutions do. So for whatever reason, institutions are buying dollars at this particular point. There are a lot more buy orders than there were sell orders in this particular area here. Now, what I'm going to look at is this key area is, hey, you know what? They didn't get all their orders filled. I don't know why institutions and big market players were buying at this area. And honestly, guys, I don't care because I'm never going to know. But what I do know is I'm going to take a shot at that area because that's the last time these guys stepped in. And that's when my risk is lowest and my reward is low and my reward is highest. So what I'm going to do is I'm going to wrap a couple of lines around that. And I'm really drawn to the fact that, like I say, we had this explosive takeoff from this particular zone. Now, if you wanted to make your zone a little bit bigger, that's fine. Okay, I like to kind of look at the little candle bases before the takeoff. So I'm concerned about, what went on in this little area here before that kind of like rocket ship takeoff. And, for me, that's pretty clean because, should the market not hold this area, should the market not take a rally from this area, we've pretty much got a clear run down. I would say to test obviously around 90, or there's another little area which we could see. Let me just move this down for you. Where the last kind of uninterrupted, good, solid rally took place from, and then we'll probably be taking it down a little lower to this 85 area. Right now, though, the concern is this zone here. So if we expect that this is our level of demand, so it all makes sense, guys? That all makes sense. It's the imbalance between the buy orders and the sell orders that cause the rally. Yeah, we can take a look at the daily as well shortly. But why I'm starting on this weekly chart is because this has got a much better number. It's a bigger area. And also it's giving me a guide over the next week or two of what to expect on some of those currencies as well. So if we take a look on here, numbers wise, I'm looking at this. Oh, don't want that. That's something from a long time ago. We don't need that. Where am I quick? There we go. That's going to be here. You can see, let me just move that over. You're looking at basically 94.33 to 93.21. Okay. No, not at all, because we've already had a good sell-off from this particular point. So the thing to understand is, it's a good question, is the zone a bit high on the curve? Well, I always would like it lower, right? But what I'm saying to you is I don't know if this uptrend is over yet. Because if you have a look at the overall dollar, and by the way, it's a great point that Eugene's making. Look at the overall dollar. I mean, really where the dollar is to where it's been in the past, these major areas, there's still room to go to the upside on here, okay? So relatively, yeah, it is a little bit higher on its current kind of trading region, its current curve, if you like. However, relative to a short-term trend, there's an opportunity there right now, because I agree it's high. But that's why I'm saying to you, for me, this is a key area, because if this area doesn't hold, we're probably going to likely see more downside, lower lows and lower highs, and a continuation of this trend. So for now, where I'm concerned as a trader, going back to this weekly chart, this is the area I care about, because if we break this weekly low, I'm then again want to get a little bit more bearish on the market. Does that make sense, Eugene? So again, this is why it's my last kind of buying opportunity for now, which means I'm going to be looking then for opportunities to short the euro, short the pound, short the Aussie, and so on, because the dollar's coming into a demand area. Obviously, if this demand area doesn't hold, it's going to shift. It's going to shift my thinking into going, hey, you know what? I think there's going to be more downside. Then I'd probably ride down to about the 90.08s or the 90.34s. And then what I would say on it, because this is the last chance. This market's really got to hold this area for me. If it doesn't hold this area, probably we are going to see more downside to the 90s. I wouldn't be surprised. A pause at 92 and then the next one down to the 90s. Absolutely. But it's good because it tells me what to do now on the dollar, what to do on the currencies. I want to be looking to short the euro again, short the pound again in those areas. And then what I would say is if we do hold this area and rally back up, my first target would be around 98 and then those hundreds. And then I'd be looking to get short again at that particular point. Okay. Can you, glad it helps. Can you correlate a tick move on the index to a pip move on a major pet? Not really, Sidon. I wouldn't really kind of go down that route. It's more as a timing tool for anything. So now if we go over and take a look, let's go take a look at the euros. I had a look at this on the daily as well. One of you guys asked. So let's take a look. You can see it on here on the daily chart. This is really where that takeoff happens. On the daily chart, we have just triggered a little tiny base within this area that's located. So you can see we've kind of had a move there. And there is a clean route up. I mean, if you wanted a first target, if this thing does rally, my target on this for its first, if you like, area would be around 97.85, 98.80. That's where I'd say we've got an opportunity to go. If you want to be a bit more conservative, maybe take it around the 97s. But that does give us the opportunity. Now, if we fail to take that area out, it's probably more likely that's going to resume its downtrend. So now the daily chart can come in to just give you some ideas of how long to stay with some of these other currencies for. You understand? So maybe obviously, if this does hold, we've got some buying pressure come in here. Let's give us some nice short-term rally opportunities on the dollar to give us some nice short-term shorting opportunities on the other currencies. All good, guys? So let's take a look at the majors. And I did want to look at obviously gold and oil as well because they're important players too in these markets. So let's go over now to take a look. So we want to probably see, because we're up coming from monthly supply on the dollar, and we're now entering a new monthly level of demand where we would expect the dollar to rally from, okay, and a weekly level where we'd expect the dollar to rally from. What we would want to be seeing on here is, are there some opportunities for us to now get short euro, short pound, short Aussie, and so on? All good? So let's go take a look at our euro USD and see what that's saying for us. All right. So no surprises to see. We have had a good month so far, Theo. It's best month for a long time. Okay. Now, not as clearly defined as it's not been as clearly defined as the dollar index, but this is what I love. There was a major level of demand right here on the euro on the monthly charts that you can see we overshot a bit and then rallied from, and there was the other little cluster of trading just below it. See this little cluster and then that strong rally that came back to, which it overshot by just a little bit, but we're holding from. Well, our dollar index, if we'd have been focusing on that dollar, knowing that that dollar was coming to the 100 market supply, that's a big heads up for say, okay, maybe it doesn't make sense for me to be selling the euro into this area. You understand? Maybe it's not the best thing. So you can see around the same time where one's fallen, the other's rallied, which is a really powerful tool. It's a great timing tool. And interestingly enough, as we're coming into a weekly demand zone on the dollar, what are we coming into right now on the euro? Somebody tell me, what do you see we're coming into now on the euro dollar? What do we see we got here? Supply. You got it. Now we're coming into a weekly supply area. So you can see that the same thing occurred, okay, that's occurring on the dollar index is also occurring on the euro dollar. So my signals to get, me a potential buyer on the dollar correspond to me being basically a seller on the euro. Because if I sell the currency pair here, I'm selling euros to buy dollars. So, looking at this, do we have a little bit more room to go on here? Absolutely. Could we tighten this up? Great. But I'd be hunting for where we are now, trying to fish for any decent trading opportunities in the region of this 1.1295. Call it 1.13 to 1.1525. And again, this is great. Anybody tell me, anybody here who's followed some of our webinars before, if this supply area breaks, where's the next level of supply? If our supply area breaks on here, it's a nice signal. This is why I like this level so much. We've got supply higher, haven't we? Yeah, 125, right? So this is why I like this zone. I like this area. And to me, it's important. One of my favorite tactics in trading is to what I call, look at the last ditch areas. These are what I call last ditch areas. Okay. So there's an area right here. This is the key area. This is the key area here. There's the 125 area. But what did we say about round numbers, guys? Don't ignore the round numbers. Remember that? There's another one right here as well. See here? 120s. You see that, guys? You probably want to include that right there because there's a bit of an unfilled gap there. There's a slight unfilled gap. If you take this to a daily chart, you'll see it. Let's go and take a look. Then we'll go back to our weekly. 105. That's way down here. See here? There's this little unfilled gap area. See that? So I would be a little test out, and I always like to go a little bit before it, but around this particular zone here, that 120 mark should be looked at as well. And you can see, I believe, Boris, as you rightly say, I do believe you can see that little area on the monthly charts as well. You see it around here. There's a little base up here. It's a little bit high. You can see the 125 area right here. You can see there's this gap in the charts here, which you don't get a lot of those in Forex. Okay. But yeah, 105, obviously you've got demand levels down at the lows as well. But yeah, absolutely. Why I like this area that I'm dealing with at the moment, though, is because there's plenty of room between 115 and 120. Yeah? Okay? So this is it to here. Okay? I'm more inclined to look at that area, Boris, purely because of the gap. Okay? Okay? Yeah, there is that candle with no wicks before there as well, which is good. I'm inclined to always, in my experience, I love the round numbers. So you could get some selling pressure in the little bit where you're talking about as well. But I like the fact that we had a good cluster of trading. I really try to lean on looking for areas around those round numbers as well in trading too. So one of the other things to understand is, and like I say, we're not going to be taking that whole level. I'd never suggest somebody take a risk that big on a zone. I mean, you could on a portfolio. You could on a portfolio, absolutely. But on a long-term trade. But what I'm trying to do here, guys, is, and this is a routine, you know, in my XLTs, in my live trading webinars, we get very precise. In the XLTs, when I'm teaching those, you know, I'm looking at specific entries, specific stops, specific targets. What I'm doing here right now is just saying, hey, look, these are the key areas, okay, where I would expect prices to respect. Should it respect these areas, it's giving me a directional thinking. You understand, guys? Okay, you know, in another future session, I'll maybe do a more of a short-term entry thing where we'll do some swing trade setups. But these are the key areas that I'm looking at, saying, hey, you know what? What I like to do is look at a chart and say, what are the key areas for me that need to be held? Okay. Oh, and by the way, I'm talking support and supply and demand. I don't knock or I don't disrespect support and resistance, guys, as well. This is a previous major area of support. You see this? This 118.75 major support area. We've not gone back to test it as resistance. There are traders who use support and resistance as well, right? Any of you guys in the room may use support and resistance. Well, I always think, what other techniques do people use? I like supply and demand. I don't use technical indicators, but I'm aware of them. Like a lot of people would say, well, this support could potentially become a new level of resistance. Well, absolutely granted. But for me, the selling pressure came at the origin of this gap a little bit higher. So I'd be looking for more return in price a little bit above it. How many times have you seen the price overshoot a resistance or overshoot a support level, then turn? Anybody in the room seen that? Well, that's because I'm looking for little clusters of trading just above or just below because, you know, institutions know where people are putting their stops. So that's why I like to go a little higher on my sells, a little lower on my buys. Sometimes it means I miss the perfect entry, but there's always an opportunity. Yeah, exactly. Great stuff, Eugene. That's exactly what I'm saying, you know. So, you know, it doesn't mean, you know, this is for me the little area just above it, you know, that I'm interested in. It's because of that gap as well. A lot of people are going to be concerned. There's that gap. It's 1.2. It's a nice little thing to look at. So my plan's going to be, okay, I'm going to be looking for more shorts as we enter this 113 area. If we start to break down with a series of lower lows and lower highs out this weekly area on maybe a, I don't know, a daily chart, I'd want to see, or like a 4 hour chart's a nice time frame. I'm going to be leaning on levels in here, and my first target is going to be 1.1, and then my second target is going to be down around 1.08. And then, guys, the key thing to remember right now on here, and this is really important as well, we've got buying now pressure that's stepped into this market. Don't be too surprised as well if we see a little bit of choppiness in this market, because we've now got major levels of supply and demand above and below. This, if you look at the chart, this is the first time the buyers have stepped in and really bought the euro for some time, right? You see this? I mean, if you look back from all of 2014, the price action early this year in 2015 is the first time anybody's really stepped in. It's the first time we've had a rally, a first time a new demand level has been created. So I can't ignore that. And with that in mind as well, I'm going to play this range until it breaks either side. So I'll be looking for shorts up at the 113 area down to the 108s, looking for longs from 108s back up there. If we break higher than 115 on smaller time frames, I'm going to ride it up. If we fail and we hold this area, I'm going to be looking for pushes to the downside, because that corresponds with my dollar index. You got that? Okay. So it's just a good way of doing it. I like to trade off of daily charts. I like to trade off of higher time frame charts. So daily charts, 8 hour time frames, 6 hour time frames when I do Forex. If I'm going to trade day trading, like in the futures, I like the 15 minutes and the 1 hours. So I'm all about kind of, I don't like to go down to the really tiny, small time frames, because unfortunately with that, you can get whipped around a lot, taken out of a trade very, very quickly, and it can be a little frustrating. Okay. What I'll do is I'll quickly run over to the pound dollar as well, and then we'll take a look at gold and crude oil. It's all good, guys. All makes sense. Some of the key areas there, what I'm looking for. These are major roadblocks with plenty of price action opportunity between them, which we can use on smaller time frames as well. And I think, this kind of analysis is what I do on a weekly basis here to get me mindset saying, but here, these are the kind of areas. Do I foresee price going to parity? Look, anything's possible, but I would say let's just take a look at back to the monthly charts. Let me say this. I can't help but ignore this area here. I can't help but notice this area below parity. Wonderful level of demand right here, where massive area from like a decade ago. I'm less inclined. I would say this: if we manage to if we start trading above 1.15, see here, this previous monthly high. Let me give you the number on that. If we can start trading about 1.1533, we get above there, I'd be surprised to see parity this side of the year. I want to see a start. I'd like to see, this closing on here as well. And I'll be honest with you, the minute everybody starts talking about parity and the papers start talking about it, I tend to say probably not going to happen. So as it stands right now, not in the near future. Personally, I don't. But I could be wrong, as you know. I'm going to quickly take a look at the pound dollar, and then we'll grab a couple of commodities. It's not going to take me long on the pound dollar. I just wanted to do a couple of those majors, and then we'll go over to oil and gold, and we'll take a look and see where they're at. So I need to just kind of adjust these. These are some levels on smaller time frames that I was looking at right now. So let me just adjust these, because this is just a transposed chart. So let me just start again. We've done exactly the same thing on the pound lately. And what we've done is we've rallied from serious monthly lows. We're in a massive cluster of trading again right now on the monthly charts. This whole wedge of trading is huge. And for me, the big level, the big price on the monthly charts is between 156 and 158. So if you take a look here, 55.77 to 57.82, that for me is the major area. But within this major area, located just below it, you can see there's a ton of stuff that the pound dollar's got to get through right now. We have literally this week, yesterday, hit into a major weekly supply area that's close, very, very closely located into this monthly zone right now. And above it, and this is not as clear for me, this market, nowhere near as clear as The euro, in this respect, this is the work that the pound's got to do. I mean, I can't see, unless we are trading above 158, this market's very unlikely to break. And I would say there's a lot of pressure on here. Right now, my focus with the rallies that we've had in the last 3 weeks on this pound right now, and I know we've got the election next week and so on, so do be careful with volatility and so on as well. The major test for me is I can't bring myself to be getting really bullish on this market until we've got a clean break of 158. And what I don't like about it is even if we do push ourselves higher above 55, we're going to be hitting the 56s area. It's a little bit more challenging. But based on the structure that we've got this week, based on the selling pressure that's coming into this market, I would say if we can start making some lower lows and lower highs on those 4-hour time frames, 6-hour time frames, I'll be looking for prices to drop to around 150 or so, maybe in the next week or so. Again, if we hold 150, general election, I don't know what the result's going to be or so on, but the market's got a heck of a lot of work to do based on what the chart's telling me. And we've arrived there in a very solid fashion. And this is what we call a fresh level. This level did not exist. This area here did not exist until like a few months ago. And that tells me, therefore, that some of the major market players have deemed that 154 is a key area right now on the pound dollar. As of lately, it wasn't here before. Therefore, seeing some selling pressure on that wouldn't surprise me too much. So again, ranging kind of a ranging market perhaps. Absolutely, it's setting itself up for that. Let's take a look at the dailies real quick and see. And look, even the daily chart scares me a little bit by the price action that's got in front of it. I really can see around 150 as a first target on this market here. I would love to be a buyer. I would love to be a buyer down here at the 49.41. I think a lot of people might get bearish and bullish and start stepping at 150. Me, I'd be holding out to try and buy around 49.27 when everybody thinks that 150 area has been broken. With the stops, I'd be looking at my cutoff point below 48.55s where we can see. So, a first area I'd say is a breakdown to around 152 is definitely on the cards. Second target on here would be around 150 if you're going to be conservative, with a buy around 149. That's what I'm looking at there on the pound as well. I wouldn't be surprised based on the monthly charts, though, to see more of a range over the next coming months. Really wouldn't surprise me because, at the end of the day, there's overhead supply on the monthlies, demand just below, probably going to see a lot more ranging. Okay. Let's whiz over to gold and oil as well. Okay. Now, crude oil. Crude oil, I've been bullish on crude oil when I was talking to Dale last month. In January, actually, it was. The key area that I drew in on my chart, you can see I haven't moved any of these. The 43.59 to 33.40. This was my area. I've been looking for a break. I've been expecting a rally from here. This is a heavily oversold market, which if this crude oil does continue to rally, we would expect more of a sell-off in the dollar against the CAD. So USD CAD would expect a lot more of a sell-off in that particular market. So for me, this has taken out a massive area. $55 was key. It was a previous monthly high where a lot of selling pressure was taking place. When we managed to break through that cluster of trading, I definitely got a little bit more bullish on this thing. And if I go over to my weekly chart, we can see now some of these daily areas are really holding. Not a lot to stop this at the moment. We need to look at some targets on this from a weekly perspective. I got to say, it's a subtle area, but if you're a crude oil, speculator and looking at where this thing could potentially go, I would be saying, realistic. This has got about another $5 in it. The last area here. I want to see us trading above $60, but if we hold $60 over the next few days, I wouldn't be too surprised to see a push to 65.76 on here. And this zone here, there was a little base and a strong sell-off, but a huge wick in the area. And when I see a huge wick in the area like that, it kind of makes me think that the price is going to go deeper into it. So I'd be I'd be more inclined to see, that this could get into the high 60s, maybe even a test around $70 on this. And I don't really think that's unrealistic at the moment. The funny thing with these commodity markets is as quick as they go down, they can come back up and vice versa, guys. So at the moment, the price is behaving. It needs to start putting in some new significant areas as well. And I would say if we do manage to break higher and we do manage to push a little bit, I'd be very inclined to see how this area here holds. Now, this area isn't much right now, but if we do manage to push up a little higher, if we then pull back to the $57.93, 55, 56 area, I would expect this price, as long as this area doesn't get broken, we've got every chance of rallying in this market. It's putting a nice double bottom at the moment, a real nice double bottom. Now, if you're a classic double bottom neckline measurer, that would mean that if you measure this, let's be conservative, this area here to this area here, and then move it, as you can see, you measure it, it's probably taking you up to around just shy of that 65 area there. You're looking at actually 65 dead on. So technical analysis would be telling me, combining a bit of supply and demand and some old school trickery as well, yeah, I think there's a good opportunity there for that market to be hitting around the $65 mark, definitely. We get above that, I wouldn't be surprised to see us pushing a little bit deeper into that zone. Then, guys, again, you've got to focus on those round numbers. And, the real selling pressure that I see, where the biggest challenges the crude oil could face if it can continue this rally, would actually be here, a beautiful zone, just before $80. Very key area here, 75.46 to 79.74. And then obviously as we get all the way back up, $90 has always been a big number on here. So just shy of $90, just above $90 on here. These would be like kind of intermediate targets I'd be looking for on a long-term side of it. What that would also do for us is it would suggest a continued sell-off in the dollar against the Canadian. So if you quickly do take a look at the chart of that, let's just quickly pop that on side by side. You can see on here the same thing. So as we've hit that monthly area, on crude oil, see what we did? We hit a monthly supply area on the dollar Canadian. And the room is there to go. No surprises, we're stalling around the 120s mark at this. But again, looking at dollar Canadian, which is obviously has an economy based on supply and demand for crude oil as one of the world's major producers of crude oil, we would see on here that there's a really good chance of this hitting the 1.1 level again in the coming months. Again, don't expect it to happen in a straight line. There was a previous resistance area here at 117.45, which again would be a good next target. Then I'd be smart around for 113, and then I'd be looking at the 109.74s. If crude oil can hold on here, there's that US dollar Canadian will follow through in exactly the same way. Remember, another way that you can trade crude oil is by trading the dollar against the Canadian. They have this inverse structure. If we look at the monthly charts side by side, you can see it. Like looking at the same chart where one's finding a level of demand, the other's finding a level of supply. You see that? So, while they're not going to move pip for pip, tick for tick, guys, they are important in that respect, to be aware of those relationships and aware how those things do kind of relate to one another as well. I've always found that pretty useful. It's a good kind of lower cost entry. I know a lot of forex brokers offer spot oil as a market that you can trade, which is good. I know that. I've traded enough crude oil futures myself in the time as well. But another kind of way to do that, a little bit simpler, is to be looking at them from this perspective. Hey, I'll trade the dollar against the good question on here, which is leading. I never try to tell which is leading. I would say, Zia, that the best thing to do is, hey, are these things, hitting support and resistance areas at the same time? You kind of just want two pieces of evidence telling you the same thing. You understand? That's really all you want. If you've got that, you're in good shape. Otherwise, you can get caught very easily in trying to, be too clever at being smarter than the market. And the market's the smartest one of all of us, okay? The market will outsmart us any day of the week. So rather than that, focus on the opportunity. Are the corresponding markets telling me the same thing? That's going to be the best bit. Gold, I've already got levels drawn in, so I'm literally going to just go over to this right now. These are some other charts that I've got on here. I'm going over to the gold chart here for a second, guys, because I've already got the levels drawn in. Gold's kind of behaving, in the way that I would expect it to. It's not the nicest market. There is a slight weakness on here from a big picture perspective. Gold is still making lower lows and lower highs. Okay. The area in question, for me, one of the most important areas, I need to just do something here quickly so those things are in the back, not in the background. So let me do this quickly. Let me just get this off here. For some reason, let me do this. I don't know why it's on there still. I can't seem to get rid of the watermark. Don't worry about it. It doesn't make... Can you again try to explain oil and dollar CAD correlation a bit more easy? Well, they have an inverse relationship, the currency pairs, because Canada is one of the world's major producers of oil. So when there's demand for oil, there's a demand for Canadian dollars. Okay, so basically you can't. Canada's not going to accept you buying oil in francs or pounds or US dollars. It wants to be paid in Canadian dollars. So what people need to do is convert their US dollars or other currencies into Canadian dollars to buy Canadian oil. So as the demand and an increase in oil goes up, it's likely to see an increase in the Canadian dollar. That's basically it, and vice versa. You understand? Like I say, each nation's going to want to be paid in its own denomination. So that's what happens. All right. So, no worries, pleasure. So, if you're a moving average person, I do like to look at some moving averages as well. Key areas on here, and I'm going to have to just quickly insert something on here for you so you can see the numbers. So just give me 2 seconds, because I don't have it on this chart. Won't take a sec. There you go, perfect. Here's gold. The level for me that is holding right now is this 1176.23, 1130. I'm treating gold as a rally. I think as a ranging market. From my perspective, just as an individual, I believe that, gold is just a safe haven tool now. It's not necessarily like an old school, commodity play. It's a safe haven when people aren't having any faith in paper currencies. With that in mind, okay, we've got kind of a general weakening in the market purely because gold was so heavily overbought in the first place. But we're just seeing supply and demand being respected on these monthly levels. So right now, if gold is holding this current zone it's in, I expect more upside on here. It's a long-term play, but right now I'm playing between 1175 and 1285. I'm going to keep playing these two areas. If you want to broaden it out, call it 1180 to 1300. And I'm going to play that range. I would expect while these supply levels keep forming, we could drift lower. 1100 for me is a really important area on gold. The 1102, call it 1099, call it 1100 to 1043. I wouldn't be surprised to see us slowly drifting lower. I'm happy to still sell major rallies on gold. However, if we get into this 1100 area, I would see this as a great buying opportunity. It's the last decent buying opportunity that we've got on gold. This is also located near a previous area of resistance from 2008. And I would say, that level, if that does hold around that particular point, I think the $1,000 mark is a little too obvious. So $100, $50 above that particular point could be a wonderful buying opportunity here. And the opposing supply level could be a great long-term target. So if we start to get some nice bottoming tails coming on those monthly charts on there, and we're holding those monthly levels, I'm going to get bullish on gold, and I'm going to be riding it up probably from around 1100 to at least the $1,200 mark, where I think there's at least about 100 buck move available on here. I'm still, however, going to treat it in a like a slightly weakish market, but generally playing that weaker range as it drifts to the downside. But I would expect, like I say, a stronger rally from this 1099, 1100 move back to the upside. But guys, the market at tops, even from 1100, I'd say on here, 1300 tops is going to be a major area with a lot of selling pressure. You've got a lot of major moving averages in here. If it's not getting above that, that's going to be my target on that. And I'm going to literally play that between 1300 and 1100 because with fundamentals and the uncertainty out there right now, gold is more just like a trade long, position traders market, not a lot more, not a lot less. And that's how I'm treating it. All right, guys, I hope that helped. Thank you very much. I tried to get through as much as I could while also educating as well as analysing. I wanted to kind of educate a little bit on there for you as well. So thank you very much. I've just put my own piece up there again. You can follow me on Twitter at @SamEvansTrader, also sevans@tradingacademy.com. They're my major levels I'm looking at over the coming weeks and months and so on. I find that helps me massively, keeping an idea on that big picture as well. I'll be back probably next month. I'll be back definitely next month. It's May tomorrow, but I'll be back later next month as well. And if you've got any suggestions of anything that you'd like me to cover in these sessions as well, email me sevans@tradingacademy.com. It's on the screen right now. Do that as well. If you've got any subjects you'd like me to do in these sessions, I'm more than happy to do that. So thanks a lot. And FX Street, thanks for having me. I'll see you guys in a few weeks. Be well. Thanks, Eugene. I'll do that for you as well. All right. Have a good one, guys. Thank you very much. Goodbye.